Here's the 30-minute price chart for BROADCOM Incorporated, stock ticker AVGO. For this video chart analysis, I'm going to kind of drill in a bit here and look at the shorter term timeframes so that we can get a sense of where some upcoming trading opportunities might be seen. There was a person in the comments for the prior video that kind of expressed some concerns about not being able, about possibly missing a buying opportunity and not buying in quickly enough after seeing some oversold indicator readings. There is some validity to this concern, but I'm starting to think that we could start to see some further selling pressure here to start the week. I don't necessarily believe that these opportunities have been missed. I think that we might get another shot at these areas. So I wanted to kind of drill into these shorter term charts here to try to identify some price points that can be used for some new trading entries going forward. So currently, the levels that I'm watching here come in at the 1670 level. The reason that I point to this level is because I'm looking at this dominant trend move here, which resulted in a triple top formation on the price charts. So to identify these price zones, I go back to this would be the June 25th low, which came in at just below 1565. And then these extend to the highs from July 9th, which came in just below 1750. As you can see here, this also resulted in a triple top formation on the 30-minute chart. So this is now a fairly significant level of resistance here going forward. We can see that this level is roughly 1770, and it has been tested on several occasions here. So this will really be the key to the top side if we are going to start to see some new moves in the bullish direction. However, there are some issues that I think we should point to here because were several stocks that were really kind of trading heavily into the Friday close. BROADCOM I would say, would be one of these. I mean, we do see here that there's a red candle to close the Friday session. And then in addition to that, we did close below three of these exponential moving averages. So that would be the 20 period is yellow, 50 period is orange, and then the 100 period EMA is this purple line here. So on Friday, we closed below all of those. We did not quite reach the 200 period EMA, but there really is not much support here to hold up prices in the event that we continue to fall lower. There was a significant sell-off on Thursday, and we can see that in this chart. That would be this price movement here. BROADCOM so far has not fared as badly as some of the other names in the market. One name that I would really point to in particular would be Meta Platforms, the Facebook parent company. This is a stock that's broke through some significant support zones and really didn't recover those gains into the closing period. So this is a bit concerning. It does suggest that we could start to see some downside movement here if this, in more broadly within the tech space, if this starts to become a more significant story. So in particular, I would really be watching Meta Platforms stock here for some possible, near-term direction in the technology space. Because that stock is trading under a lot of pressure. And if that stock is not able to recover relatively quickly, we are going to be breaking some significant lows there in that stock. And that could lead to some additional downside, some accelerated selling pressure. So I plan on doing a video on that next. If you're interested in that, you can check out that video. So currently to the downside, if we do start to see some selling pressure here to start the week, the level to the downside that I would be watching roughly comes in at 1670. This area marks the 50% retracement of this dominant trend move. So it essentially means we would have given back half of these gains. And then this also coincides nicely with the 200 period exponential moving average, which is the only major moving average here that we have not broken. In addition to all of this, one other reason that I'm pointing to potential downside here is due to the indicator reading in the relative strength index itself. So as we can see here, we have a sort of a bearish divergence condition that seems to be developing here. If we go back to the July 5th highs, which posted at, this would be 1765. So just into the 1770 resistance zone, triple top. We can see that once this occurred, we started to see some downside momentum that did start to build and gain in speed and in rate. But while that happened, we continued to make relatively similar highs in share prices themselves. So in my view, that would qualify as a bearish divergence condition. And it really did suggest that we were ready to start to see these types of declines here in share prices. So it really shouldn't have been a complete surprise. As that occurred, we did see a spike in negative trading volumes. There's many red bars down here that sort of overcome the green bars down here. So there are a lot of things pointing in the same direction here as far as these potential declines. I'm not completely convinced that we're ready to see a bounce yet, except for the fact that we do see kind of a mildly positive reading in the relative strength index itself, stretching back to this would be roughly the second half of June 24th. So, the only reason that I wouldn't immediately side with this positive indicator reading over the negative indicator reading would just be due to the severity of the slope. So, as we can see here, the momentum here is much more drastic on the shorter term basis. And it does suggest that we could continue to fall further near term. Part of the reason that I say that is because, the relative strength index itself is trading near the 42 level. We can remember that the relative strength index measures from 0 to 100. Anything below 30 is oversold. Anything above 70 is overbought. So a reading that's around 42 suggests that we still have a lot of room here to the downside that could be seen before we would even start to break this uptrend in positive momentum. So in other words, like we could continue to fall here a bit before breaking this uptrend. So the current level that I would be watching here, we don't really have much support, immediate support in this area. We've got a bit of a double top, a very short term double top. I mean, this would be like a 5-minute chart double top at roughly 1725. So, if we don't break above there, I do think that we're going to be looking back again at these 1670 levels. So, these initial concerns about possibly missing a buying opportunity here, you might get another opportunity at this price zone. I really do think that a lot is going to depend on Facebook. I know that's kind of a strange assertion to be making, but the losses in that stock have just been so severe, and there are so many other tech stocks that are kind of trading in vulnerable territory. I kind of feel like any bad news in the technology sector could weigh on all of them, and could bring a negative start to the week. So I would keep looking at this 1670 level as a potential buy zone. Possibly scale into a position there. We are going to be looking at a stock split with this stock BROADCOM. It's really overdue. It really should have occurred already. $1,700 is a bit of an unwieldy share price. And it kind of discourages a lot of people from buying. But that will be happening. It's in the future, and that will also be a positive for the stock going forward. Overall, this is still a positive name here, positive expectations, but we will be looking to buy on dips here. So this is the current market analysis for BROADCOM Incorporated, stock ticker AVGO.